The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the March 6th, the magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I can make that one little 2x4 shift, well, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I am absolutely grateful for your presence here. But even more important than that, and that's this, during this next 53 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on it at 877-927-6648. Would love to hear from you. If you have a question but you can't call in, you can always send me an email. Now, send that early and send it out to steve@tfnn.com. And, of course, in that subject heading, if you'd be kind enough to put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on magnificent, marvelous Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, a little bit of a mixed bag. That mix is coming from the Russell, which is off 8 points. Otherwise, the other U.S. indices trading to the upside. Dow's up 130, S&P 28, NASDAQ 162, which is 1 3/10%. Semis up 32, a little over 1%. Gold is up $2. Silver off a penny. Like sweet crude is trading on at 79.50. That's off 18 pennies. Natural gas down 42 cents. Traded out 258. And the 30-year Treasury up 8 ticks. 124.03 is the print. Now, leading the charge dollar-wise to the upside is Mercado Libre up $37. Line Technologies about 18. Costco 12 or so. Domino's nearly 12. And Enphase Energy up 11.50. To the downside, it's Dexcom off $9. That's about an 8% move. Cheniere Energy is off $8 or 5%. Asmil Holdings down 7, and BioMarin Pharmaceuticals is off $6. That's a 6% move to the downside. So let's begin by taking a look at the equity future contracts, the 4 daily ones. Here, in the case of the ES Mini, if you're asking me where is price likely targeting, well, it's above the top of its daily profile. It did that on Friday. It is above the center of its weekly profile. It did that on Friday, and that says that we're likely headed back towards its highs. Now, if we take a look at the high that I'm referring to, it's from the date of February 2nd. The low of that high is 41.3675. That becomes a price target. There's also the descending trend line out there. Now, the descending trend line could take us into about the 41.80 area. If we just take a look at retracements that have been performed so far, we'll just simply expand out the CS mini chart. It should make it a little bit easier. We're below the 0.618 retracement, I believe. So everything here is pointing to a further move higher. Absolutely. So in this case here, we're above resistance level. So 4,100 would be the next logical price target for the ES Mini. Let's take a look at the NQ. The NQ is strong like bull. It's now traded above the top of its daily profile. So it's got that nice bullish Gartley buy pattern that formed out here in the trading session of March 2nd. Price is now, again, taking on that resistance point, the top of its daily profile. That's at 12,408.50. We close above that. That says that we continue to move higher out there. Now, price right now is trading into its swing point. This swing point is from the trading session of February 16th. Therefore, a close above 12,455, we're 12,475 right now, is going to suggest that we likely move higher. If we take a look at retracement values, we go from the high to the low, the recent high to low, that is. And that's the high from February 2nd, all the way down to that Gartley buy pattern. This too has not made its way to the 0.6 retracement level. So here what we're looking at is at least a move to 12,522, but more likely up to that 12,710-ish type area out there. Let's go take a look at the Dow equity future contract. The Dow Has a TD9 count bottom. Friday price closed above the top of its daily profile. Its next resistance level is the center of its weekly profile. That's up at the 33,702 level. We don't have anything to suggest that that is not going to take place. In the case of the Russell 2000, one indice that is trading a bit lower this morning, what it is dealing with, as you can see, so there's an A to B equals C to the downside. I'm going to get rid of that. What we can see that's really going on is just a consolidation with inside its daily profile out there. Well, it's found resistance. The top of that profile is at 1936. Today's high, 1936. So what you know is that is a key resistance level. That, if price closes above where the Russell 2000 should target, is then the top of its weekly profile. And that's at that 1959 level out there. So that's where we're at with regard to the 4 equity future contracts. If we just take a quick peek, take a look at what's going on the other 4, the white background charts with regard to the equity future contract. We don't have any kind of a topping signal or anything. We're only in bar number 3 on a daily time frame. We're above that green oscillator and change line. That is always a bullish configuration, especially when you're above the top of a profile and a green oscillator and change line, which is what we have right now for the ES and the NQ. The Russell 2000, it's found resistance at that oscillator and change line. So we just have a consolidation going on there. In the Dow, it's above the red oscillator and change line, but as long as you're above that, that says that you can still motor on higher. Now, I had mentioned earlier, I'm like, yeah, we are. If I mentioned the NQ out there, the NQ is very, very strong. What do you mean it's very strong, Stevie? Well, there were TD9 count tops that formed earlier this morning. In the case of the 5-hour time frame chart, that was at 4 a.m. when that pattern actually was really at 9 a.m. when the pattern was fully complete out here. And we can see that price is trading above that high. Now, this bar does not complete until 2 p.m. and it's only 11:12. But assuming that price closes above, here's the high, closes above 12,382.25, and it's trading above its TD9 count breakdown level at 12,404. This is suggesting a further move higher. The 240-minute time frame chart, the same thing. Now, this candle is going to close at 2 p.m. Oh, they both are closing at 2 p.m. out there. 2, make sure, yeah. So they're both closing at 2. If I take a look at the 120-minute chart, its TD9 count pattern, that completed at 2,200 hours last night. This next bar is going to complete as we get off the air at 12 noon. So as long as price is closing above, trading above 12,378, that's going to be a signal on the 120-minute, the 2-hour time frame, that price is going to continue to move higher out there. Now, I'm not talking about some real short-term intraday jostling, but what we have out here is a setup for the ES Mini, for the NQ, and really the Dow to continue their move higher. If we take a look at market breadth for the NQ right now, we'll see that for its 4 time frame, well, it's the ES Mini. Let's take a look at the NQ first. We'll come back, take a look at the NASDAQ. If we take a look at the NASDAQ, you'll see you are in bullish mode across the board, 60, 240 daily and the weekly time frame. So it's got the market breadth in order to continue to move higher. The S&P 500, it's slightly bearish, and I do mean ever so slightly bearish on the S&P 500 for its weekly time frame. Otherwise, the other 3 time frames are set up for a bullish move higher. In the case of the weekly time frame, there's 107 instruments trading above the top of weekly profile and 109 below the bottom. So I wouldn't worry that it's in a slightly bearish configuration with just 2 out of the 500 plus stocks inside the S&P 500. So what are markets going to do? They should continue the rally. Steve Rhodes with TFNN. Be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we got the mixed bag out there again that Russell's off about 8 points. Otherwise, the other U.S. indices are trading upside. We've established here in the NQ that everything is pointing to a further rally. Now let's go take a look at some of the requests that have come in. The first one coming in from Duncan Steve. He wants to take a look at the SMHs out here. The SMHs right now on Friday, Steve-O. What price did was close above the top of its daily profile. That left one level of resistance for it to take on. That's what it's doing as we speak right now. That level of resistance is exactly printed out at 246.71. Of course, those digits are going to change as price moves up and down. The price is trading out above that level. We're trading at 247.35. The SMHs want to continue to move higher. If I look at the weekly time frame chart, there's an A to B equals C to the upside. Prices above profile. It's consolidated. It's a new profile that formed last week. So your resistance area here is up at the 255.64 level. Looks to me like that's what it wants to target. Now, the confirmation, most certainly, that that's what it wants to do, Steve-O, is with the price moving above its monthly green oscillator and change line. We can see that that acted as resistance last month. It would be nice for the SMHs if that would fail. Now, to fail, you need to see it close above 247.71. Of course, it's only March the 6th, so we have a long time left in the month. But still, if you can get price above that level, then what these 3 charts here for the SMHs would be saying to us, Duncan, is that this wants to move higher. If we take a look at a 30-minute time frame chart out here, we're going to see that a TD9 count pattern formed at about 10:30, if I'm not mistaken. At 10:30. And what happened right after that? Price closed above that high. That pattern was negated immediately. That says on a 30-minute basis, there is a strong momentum move to the upside. So the SMHs here tell us they want to continue to move higher. Lastly, if we take a look at the SMHs from the standpoint of how many consecutive days are we trading higher, this will become day number 6. Last time that we had this many consecutive days, we can see out here in the SMHs, we've seen since the bottom and back in October, we've seen 2 7-day consecutive moves where each close was above the prior close out there. And so that says at today's number 6, I would expect that tomorrow we see bar number 7. And then we get some type of a pullback out there in the SMHs. But overall, we look at the SMHs here, the daily, the weekly, and the monthly we call neutral, but the daily and the weekly are anything but neutral, at least as 11:20 in the morning out there. So I hope that helps you out, Duncan. I hope that provides you with what you were looking for. Just out of curiosity, what do the SMHs typically do during the See, it's seasonal pattern out here. Let's go find out. Let's punch up the SMHs. Here we go. And let's see, how far back can we go? We can go back 22 years here. Let me take out the March 2020 stuff. There we go. So the SMHs are even. So one of the cool things about this tool is I can eliminate the COVID crash, so to speak. And here you'll see me. So here's with it eliminated. Here's with it not eliminated. So with it not eliminated, if 2020, the COVID crash was kind of an anomaly, which I think that it was out there, it says that we should be bottoming right around this time period. It bottomed obviously a few days ago out there, the SMHs. And so its most recent bottom, that is. And so, yeah, this supports the SMHs continuing to move higher. So, Duncan, Steve, I hope that helps you out. Thank you very much for the request. The next request coming in from Dan. Dan, ABCD inside the Tiger's Den. And Dan wants to take a look at ticker symbol SND. So what is SND, actually? Well, we know it's trading out at 240. SND is the Smart Sand company out there. We don't see any kind of a top. Price above profile, prices above its green oscillator and change line. This suggests it wants to move higher. Now, the question should be, move higher to where? Well, the next level of resistance that we have out here, Dano, is at 264. That happens to be the top of the weekly profile. Price last week closed above the center of its bullish structured profile. That says to me this should head up to the 264 level out there. What else do we have that we can take a look at here for sand? We've got 259 on a daily basis as a potential resistance point. That is the TD9 count breakdown resistance level. So, Dano, as I take a look at the charts here for sand, I say 259 to 264 are in the cards. Let's just make sure that there's not some kind of short-term pit stop. For that, we'll take a look at that 30-minute time frame chart. What do we have here? Well, you've got a TD9 count top that has led to a consolidation between support and resistance. Imagine if we didn't have these profile levels. We really wouldn't have a good understanding. Why did price stop on the trading session of at 10 o'clock this morning and now obviously at 9:30? Why did price stop where it did? And we know the answer to that because those profiles tell us where buyers and sellers are lined up. And those buyers, they've been able to contain price. The sellers, well, we're not sure yet. So that level would be 246. But the reality is, Dano, what you need in order to suggest that this thing is put it back in gear and it's ready to make that move towards that 264 level is going to be a close above 249. So I hope that helps you out with regard to SND out here. Also, just take a quick peek. I see that we've got, let's do both things because I don't have that many requests here. So SND, this is going to be potentially day number 8 of consecutive moves higher. So this thing is really on a tear here. Don't know how many consecutive moves higher we've seen in this instrument. Well, I'm only going back about a year or so. Wait, what the heck? What was that? Oh, actually, I didn't get all the way. My apology. Yeah, so I would expect or anticipate we're going to get some type of retracement here soon, though. But otherwise, the bigger picture is, wants to go hit those target levels. Now, just curious whether or not our SeasonX tool has SND inside it, just so we can take a look at this instrument, see what it does. It does. Although this said Saunders, SND. So maybe it changed the name from Saunders to Smart Sand out there. Let's see how many years back we can go. We can go back a full 15 years out there. Let's go ahead and, let's see, did that 2020? That didn't really impact it that much. So interesting thing here, this is going against the grain, but that's okay. But just so you know, I mean, that's what you're up against. The grain basically says, hey, ordinarily, historically, this thing has moved lower into about the middle end of March out there. But in this case here, it's headed higher. And even though the seasonal says that, I say don't pay attention to the seasonal, not at this stage here, because it has ignored it. So I hope that helps you out, Dano. Thanks so much for the request. We've got Hector that has offered a request out here as well. And what Hector and Patty would like to take a look at is IWO. And IWO is the Russell, right? The Russell 2000 Growth ETF. The question is, happy Marvelous Monday. Happy Marvelous Money Making Monday. Now, that's a good one. I may have to borrow that from you, and I'll pay you that royalty out there. On the most recent day, A to B equals C to up, there's 2 B points. We'd use a lower volume B point. What are your thoughts on this? So we're talking about First, I want to answer Hector and Patty's question specifically. So what I'm going to do is we're going to switch back to my black background charts. Give me a moment to do that. Why? Because I've got the A to B equals CD tool. I don't just have to draw lines and make guesstimations out here. We can take a look at things accurately. So you're asking about the daily time frame. And for me, the daily time frame, the A to B equals CD pattern is still this. And again, I'm looking at the one from December 28th. You use for your A point 224. So let's go to 224 to see what Hector's doing. So what Hector and Patty are trying to do is use this little small set out here. So let's do that for them. We can have multiple A to B equals CD patterns, but they're looking at just simply a smaller term time frame, I think. And so basically February 24 slow as the A point. Now where would be the B point? 235.43. It's a 235.43 level, which was both the trading high for February 28th and the day before. Then the C point would be right out here on March the 2nd. Now that B point had volume of 240,000 shares, crossed with 452. So yeah, Hector and Patty, there's a 74% retracement. That is A to B equals CD. We come back to this break though. Let's continue to look at the IWO.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charted software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. So we're taking a look at IWO. That was for Patty and Hector. We're taking a look at a small A to B equals CD pattern. Now, if there were to be a bearish reversal candle that would form here, that would suggest that that would be a Gartley buy pattern, a Gartley sell pattern, that is. And that would suggest a retracement. That retracement could take us to the 236.33 or the 232 level out there. So that's a small A to B equals CD. The larger A to B equals CD that's in play out here is this one, and that starts with the lows from December the 28th. That B point was on the trading session of January 18th. 726,000 shares traded then. That was crossed with lighter volume out there. It doesn't matter. It still has that A to B equals CD pattern that is in play with a price projection level in the 248. So we just have a consolidation right now with inside its daily profile out there. And again, a quick move back to those white background charts out here for IWO. And what that's going to signal to you and I is that the pullback so far is just a normal pullback. It's testing support. That support happens to be that green oscillator and change line. That number is exactly printed at 237.44 or 237.39. A price close below that brings the profile levels of 236.33 into play. A close above it brings the 240.48 area into play. So Hector and Patty, I hope that answered your question with regard to the A to B equals CD patterns that are out there for IWO. And thanks so much for your request. Much appreciated. The next request coming in from the Tiger's Den, and it's from a ATV out here. Oops, an ATV is wanting to take a look at wheat. So we've got the May contract for wheat up on our screen out here. So the thing that you want to first pay attention to, ATV, one of the ways that markets will make tops or bottoms, that they can make tops or bottoms, are with the TD9 count. The TD9 count is something that I teach to all subscribers out there. So if it's a pattern you're interested in learning, you can just subscribe. You can do that for 29 days. It costs you nothing. So here we can see that a TD9 count bottom actually completed on March the 2nd. It formed on March the 1st. That low is a key level for you to watch. I had posted inside the Tiger's Den earlier before we pulled up these charts that my charts are telling me that wheat wants to head lower. Now, that is assuming that price does close below that low of the TD9 count pattern, and that is at 701.75. We're at 698.75. Now, if price holds that level, means it bounces back and it closes back above 701.75, then the TD9 count pattern remains in effect. So you really have to watch today's action before you would really enter a trade out here, because a close below that says we head lower. If I take a look at the weekly time frame chart, we'll just simply expand this out here, and we'll pull this back just a tad. The weekly time frame, if you see out here, this topped with a TD9 count. It was bar number 8 that it did, so you can understand those. Here's a TD9 count bottom that led to a 3-day rally into this red oscillator and change line. Being unable to clear a red oscillator and change line tells us that the price oscillator is below zero and it's falling. Those are bearish conditions. On the weekly chart, we are below the bottom of its profile. We are below the oscillator and change line. This tells us price should likely head lower. Head lower to where? Well, 694 is going to be a real key level of support. That is a weekly TD9 count breakout level. If price closes below that, wheat is headed even lower out there. We do have a wave number 7 pattern on a weekly basis. That requires a higher low to form. That will not come until, could not come until next week out here. So my daily says lower. My weekly says lower. My monthly says this is about to form a TD9 count bottom pattern between this month and next month out there, with price targeting 681.75. Now, if you're an intraday trader, then you might have different patterns to take a look at. Here's a 30-minute time frame. A 30-minute time frame shows a TD9 count bottom. What did price do? Price bounced all the way up into resistance. First, it got above the first resistance level, that red oscillator and change line, and then made its way up to the bottom of its 30-minute set of profiles. Never actually got up there, but that would have been the first resistance level, and that was at the 701.25 area. So here we have, even though we have a bottom pattern, we'll call it more neutral than anything else on a 30-minute time frame, but what we do know is price was unable to take out a key level of resistance, and that was the bottom of that 30-minute profile. So overall, what we see here, now, if we take a look at wheat from this standpoint, in a bear market, so to speak, or a market that wants to trade lower, what we will see out here is that, this is on a daily basis, is that we get 2-bar knee-jerk reactions. What do you mean by that, Steve-O? Well, this tool here, this set of chart, this chart specifically, what this does, this takes a look at consecutive closes above the prior close or consecutive closes below the prior close out there. The prior closes to the downside would be in red. The digits to the upside, obviously, are those that are closing higher. What you'll see out here is that 2 bars is a pretty normal time frame before there's some other type of movement. So you had a 2-bar move on February 13th. That set off a move lower. We had a 2-bar move up here on March the 2nd. That set up a move lower. We had a 2-bar move higher up here on January 31st. We had a 3-bar move. So 2, 3, and 4 are the typical increments. 2 are the most logical and occur most often out there. So So even this set of charts out here is suggesting that, yeah, wheat should head lower out there. So I know you were taking a look at a long position out there. I'd wait till the day's end. If you get it close above that bar number 9 count, again, that was at 701.75, then you perhaps consider a long trade. But that long trade, the way you'd be looking at it is price could very easily find resistance at the red oscillator and change line at 721.90. So those would be the parameters in essence that you'd be looking for. So ATV, welcome to the Tiger's Den. Maybe you've been here before, I haven't seen yet, but I hope that review of wheat assist you with your trade. Let's go to the next request out here. This was from, I think it was from G Motion inside the Tiger's Den. And G Motion wanted me to try to assimilate the Qs, which is the ETF for the NDX 100, and then the NQ, which is the future contract for the NDX 100. Well, I'll do my best, but G Motion, you know that these two will not assimilate perfectly or exactly. The right-hand side of the chart, we're basically trading for about 23 hours. The left-hand side of the chart is basically 6.5. Yes, there's some pre-trading and post-trading out there. And, through Ameritrade, you can even trade the Qs in essence overnight. But you really still need to be paying attention to the stock chart for the NQ. You don't have to trade the NQ. You need to be aware of the patterns that are inside the NQ. Why? Because we have more data available to us. Now, turns out in this instance, both the NQ and the Qs top with a TD9 count pattern. They both top with the bar following bar number 9. Those of you that listeners for a long time or know the pattern know that is the a TD9 count forming on the bar following bar number 9 out there. That does not that's part of the pattern. So only that high, if that high is taken out, is that an issue. Now, in the case of the NQ is targeting the 12,501.75 area. We say that because price is above its green oscillator and change line. Again, that means a rising price oscillator above zero. Bullish condition. Price is above the top of its profile. The 4 time frames that we monitor, daily, weekly, monthly, well, really it's weekly, daily, 240 and 60-minute time frame charts are all set to bullish from their TAS market profiles, meaning more instruments for those time frames are traded above resistance, the top of their profile, versus those trading below support, the bottom of the profile. So 12,501.75 is the first price target. Now, here's the issue, G-Motion. That may occur tonight at 6:05. May occur tonight at 7 o'clock, may occur at 3 o'clock in the morning. I've got no idea. But we really don't have the Qs themselves trading there. Most people aren't accessing the Qs for a trade out there. So you could get the NQ up there. Remember, this is day number 3. We talked about those knee-jerk reactions. It wouldn't be a surprise to see price get up to 12,501.75 and then find some resistance and then perhaps a pullback out there. But that becomes the price target. Both are really set up as bullish conditions. Now, G-Motion, if you pay attention to the charts, on the right-hand side, you can see where we have those profile levels. The left-hand side, we don't have any new profile levels for the Qs. See, they're way down. So the NQ itself always provides us with better or accurate information from a pattern recognition standpoint as to what it's doing, and then it's going to take its lead from the QQQ. The same for the NDX 100. If you're a pattern recognition trader, it's really all about the futures contracts. Steve Rhodes with TFNN. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Still a mixed bag out there, but you've got the trannies that have joined the Russell. Russell's down 11, trannies are off 13, Dow's up 102, S&P 24, NASDAQ 144. The semis there up about 18 points, about 0.6%. Let's go to our next request out here. Next request is to take a look at ticker symbol CBM. So we got CBM up on our screen. We do have CBM up on our screen. CBM is Sell-Side Corp out here. Sell-Side Corp right now, trade out at 312. It is trying to form an A to B equals CD to the upside pattern. It's taking that swing point, which will be used as the B point of an A to B equals CD to the upside. That was from the day of February 17th. The volume on that trading session, 461,000 shares. Today so far, you are at 242. If we just simply do straight line math out there, that says we have the volume. Now, what it needs to do is price. And that means a close above 318. We've tested. So far, we've rejected. We're at 312. But Dan, a close above 318 today would confirm an A to B equals CD to the upside. For that, we'll go over to my other set of charts out there. I can more easily draw that and give you some specific figures to take a look at. On a weekly time frame, really setting up the same thing, an A to B equals CD to the upside. On a weekly basis, the swing at 816,000 shares. Wow, you're gonna get that volume this week for sure. You're already at 242. So that's a beautiful thing. On a monthly time frame, what price is dealing with, this could be the first time in quite a while that price is above its oscillator and change line. When I say quite a while, May 2021. So this could be signaling a change in trend. Of course, we won't know till the end of the month. But from a resistance standpoint, CBM has resistance at 352. So you're looking for a close above 352. Now let's switch back to those other charts out there so we can take a look. Well, before we do that, hold on. Hold your horses, Stevie. If we take a look at CBM on a 30-minute time frame, what do we see out here? We do not see a topping. Well, I take that back. This formed a sell the D point pattern with that dark cloud cover at 1030. But price right now is trading above the top of that 30-minute profile and above screen oscillator and change line. That says that price wants to go target that high, possibly take it out. Now, in the next 30 minutes, actually the next 46 minutes, if that high gets taken out, that high being 320, well, then you actually would get a TD9 count top out there. But that we don't have that at this moment, so you do have that sell the D point pattern. So regardless at this stage, price needs to clear that high in order to suggest that it wants to make that move higher. Let's go back and take a look at the potential for the A to B equals CD. Whether that happens today, takes out that swing point or not, that I don't know. But let's go back and take a look at the potential A to B equals CD pattern. Now, let's go take a look at the daily time. Now, that was not very smart. That was Stevie. Why did you do that? Dang it. What the heck happened? There we go. So let me get this back here. This is CVM, and the problem is I don't have all my tools on here, so that's okay. It won't take me that long to add at least the A to B equals CD pattern. So let's do that. Let's insert a study. First study I'm going to insert is going to be the A to B equals CD pattern, and really the next one we should add the volume. So we've got volume here. Perfect. Okay, let's just move this down. And now let's go take a look at the A to B equals CDs out here for Dan, who is A to B equals CD inside the Tiger's Den. So the A point, Dan, that we're using out here is going to be the low. The low is out at the level of December 22nd. The high that we're using, the high that we have to use out here. So we cannot use this high. We could have when it initially occurred. That's the high of January 13th. The reason we can't use that high is because there's a lower low that we would be using here, and so we have to use the highest high that occurs before, in essence, the C point out there. So that's going to be the trading day of February 17th. It pulls back into the session of March the 2nd. That becomes the C point, a full 69% retracement out there. So your 1-to-1 price projection level gets you up to the 358 area. But I would say, Dano, if price takes out 318, that means closes above it. Because of the way that this exploded off the C point, this will do more than a 1-to-1 A to B equals CD to the upside. So I would say the real price target becomes about the 393 level out there. And on a weekly basis, what will be nice is if price takes out that swing point, it's also the same high at 318. Again, the volume there was 816,000 shares, so no problem. If it takes out that swing point, you're above all resistance out here. So I like CVM. I do hope that helps you out. Last thing that we can do for you, Dan, is take a look at the seasonal charts for CVM. For here, what we've got is a total of 31 years worth of data. So this thing is acting much different than what it normally does. What it normally does is it begins a consolidation from about the middle of February into about the third week of April before it then starts moving higher. So normally it consolidates. We're not going to worry, but it still may be consolidating, right? If it doesn't take out that swing high, what was that, 318, then yeah, we could easily set up a consolidating pattern out here. So Dan, I hope that helps you out, and thanks so much for the request out there. We've got another request. It's from Jane, and Jane writes in, and Jane wants to take a look at Netflix. So Jane's question is, hey Steve, could you please look at Netflix? Has it hit the bottom? And is it a buy here? Thank you. So let's go switch over to our white background charts, and we will answer that question very specifically. We're going to take a look at the daily time frame. When we take a look at that daily time frame, Jane, what we can see out here is on Friday, TD9 count bottom pattern completed. It did it the day before, which was bar number 9. Price now today is back inside its profile, assuming that it can still close above 319.16. Then is it a buy? Yeah, we got the buy signal really 2 days ago on Thursday, confirmed on Friday. Now what price is dealing with is resistance areas. Now what I can't tell you is how is price going to handle resistance. But your question was, do we have a bottom? Your second question is, do we have a buy here? That depends on your thought process. The next level of resistance, because price is already above the first level of 319, is 324. Now what you should notice on that chart is that is a bullish structured profile. What I mean is all profiles are going to have a top and a bottom. Top is where sellers are at, bottom is where buyers are at. You could also say top is where resistance is at, bottom is where support is at. Sometimes and oftentimes and most times there's a center. And a center is where both buyers and sellers have convened, although they really haven't, but they believe that the fair market value would be at that center position. That's at 324. So that's the first thing to know. The second thing to know is when you close below a bullish structured profile, which Netflix did for more than 2 consecutive sessions, counter trend moves will find resistance at that center line. Sometimes at the bottom, but most of the times it's at the center. That's at 324.02. Now, if price closes above 324.02, it'll make a run for 331.10 or thereabouts. That's its red oscillator and change line. If price can close above that, then you've got another battle at 333.73, and then the final battle at 349. So has it bottomed? The answer is yes. Is it a buy? It is a buy, but you've got those resistance levels. So it just depends on whether it can take that out. I don't know. whether we'll take that out. We'll go take a look at some other charts out there, see if we can help or assist. The weekly time frame chart. Last week, if you had wrote in on Friday, I still would have told you it's a TD9 count pattern out there. You got resistance at that 324.02 area out there. And the concern about the weekly charts closed last week, even though we got that bottom pattern, is that it may want to go target 305.22, the bottom of its profile. The monthly says, Steve, well, I'm not so sure that that's what the weekly chart wants to do. Jane, we come back from this break. We'll take a look at Netflix. We'll take a look at a seasonal pattern. We'll look at the 30-minute time frame chart, and we'll finish this off for you. But did it form a bottom? Absolutely, positively. TD9 count bottom. That was confirmed on Friday. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Folks, Dow's up 109, S&P's up 25, NASDAQ 148, Russell's off 13, semis are up 20, and the trannies are down 15 points. Gold's up about $2, silver now up 2 pennies. Light sweet crude is up 21 cents. Natural gas, so we didn't take a look at natural gas. We'll do that in a few moments here. So if you take a look at that Netflix out here, there's not much else that I can really provide to you. If I take a look at the 30-minute time frame chart, it showed a nice bottoming signal here on the 30th. on the 30th. On March 3rd, that is. Nice Rhodes momentum indicator bottom signal. Price has taken out one resistance areas. There are two other resistance levels above, 325.57 and 326.60 out there. But to answer your basic question, is it a buy? It is. You've got a battle upstairs. I've given you those levels that the battlegrounds are at and where that counter trend rally would typically end, which is at 324.02. So maybe what you want to do is you want to wait to see if price can actually take that level out. So, Jane, I hope that helps you out. Thanks so much for the request. Let's go take a look at natural gas to close out the show here. Natural gas, so there's a couple of things to really show you. Can I do it all in one setting? I can't. So the first thing is on the daily time frame. I'm going to expand this chart out. What it does not show us here, it does not show that there is a new profile. There is a new profile that is attempting to form. Attempting to form because I'm using my advanced Doppler tool. We won't get confirmation until this evening, but the profile is still solid, at least at this moment in time. And by solid, I mean that price is likely pulling back to support. And support is at $2.47. You'll also see the red oscillator and change line at $2.42. So we got 242 to 247. If price closes below those levels, then where price would likely head back to is its swing point. Its swing point, which was a key reversal bar from February 22nd. So watch that high. That high is at 242. So ideally, what natural gas will do, it'll pull back, it'll test that 242 level, it'll test that swing point high. That will also be a test and then hopefully rejection of that red oscillator and change line, and then close back above 2473. If it does that, that would be the next entry point into natural gas. So, folks, thanks so much for joining me on Marvelous Magnificent Monday. Please have a magnificent day yourself, and I'll look forward to seeing you on Terrific Tuesday. Take care, folks.